And nothing seems to stop the everything rally. Once again, the reflation trade boomed in the big Federal Reserve meeting week. On Friday, the story was one of cautious optimism for global trade as both Washington and Beijing struck a more constructive tone. President Trump described the call with Xi Jinping as positive and constructive. He added that progress had been made on several important issues. Now, that shift in rhetoric provided a relief bid across risk assets, even as broader market themes remained volatile. Now, overall, last week's trading trends offered more interesting picture after the US Fed cut rates and signaled more to come. Despite all the classic diplomatic talks, markets are still waiting for actual concrete news. Once again, the biggest beneficiary was gold, with the precious metal hitting fresh record highs repeatedly. Analysts now bet that gold to hit a new high of $4,000 very soon. It turns out the Sell America angst swirling in market earlier this year was misplaced. The real mantra from global investors is more like hedge America, that is, keep snapping up US stocks and bonds, but do so while buying derivatives that protect against any decline in the dollar. Cryptocurrencies got slammed last week. Bitcoin fell 1%, seemingly from profit taking as nothing shocking had appeared. Now, moving on to Asia-Pacific stock markets, India and Japan led the regions in gains. India's story is a more compelling narrative. The country's stocks have been the worst performing among the emerging market peers this year, but that trend is starting to reverse. Chinese stocks took a hit despite a $240 billion rally in its tech stocks. Aussie stocks also closed the week lower. In the Americas, Wall Street stocks hit fresh record highs in a $15 trillion rally since April lows. The S&P 500 topped 6,660 on Friday, with tech stocks leading the charge. Bullish sentiment prevailed on prospects for more rate cuts, which bolstered the outlook for corporate earnings. Rate cuts at a time when the economy is still growing send a constructive signal for risk takers. On Friday, trading volumes spiked on Wall Street to mark the third busiest day since 2008. Canadian and Brazilian stocks rallied as well. Across the Atlantic, European stocks reflected economic pessimism. The move in benchmarks across the region showed a reversal in fortunes for investment. UK and German benchmarks ended last week in the red. Surprisingly, the French index edged higher last week. That was largely due to the French business climate holding steady despite the political uncertainty. South African stocks closed the week with gains rising 1.6%. Now, let's turn our attention to the overall economic outlook. Let's look at Asia-Pacific region first. In Asia, China's economic activity slowed more than expected across the board in August, with a sharp slump in investment. The earlier boom of Chinese exports is also starting to cool off. Meanwhile, India's economy continues to defy global headwinds and Trump's tariffs. The country remains the fastest growing major economy in the world. The outlook for Japan and Australia continues to remain under pressure from Trump's tariff and trade policies. Now, in the Americas, Trump's policies are weighing on the economic outlook, especially the jobs market, which is slowing down significantly. The trade war with China is weighing heavily on US farmers. If leading indicators of past recessionary trends are anything to go by, a large swathe of Americans are already feeling the pinch. Rising underemployment, youth and black unemployment suggest US households face significant economic challenges. Canada, Brazil and Argentina seem to be weighed down by Trump's trade rhetoric. For Europe, a lot or maybe everything rests on German fiscal stimulus shining through over the next 12 months. Now, this comes at a time when politics hangs over the outlook in the region. More importantly, the prospect of France reducing its deficit below 5% next year is rapidly diminishing. In the UK, the budget deficit surpassed expectations. That is bad news for Chancellor Rachel Reeves as she prepares for a tough budget. Tax hikes loom as Reeves looks to plug the fiscal black hole.